Welcome back, everyone. And we are back with our second workshop of the day with the theme of account aggregation, the open banking regulation of India. And for the workshop, we have Mr. Krishna Prasad. He's the founder CEO from One Money. So without any further ado, let's get this workshop started. Over to you, Mr. Prasad.
And all the participants here for making this session happen. Happy to be here and share a few concepts about what is worldwide called open banking, and RBI has nomenclatured it as account aggregation here. The fundamental theme of open banking is basically putting the power of using one's own data, what is in jargon called principles of the data. Using the data, the power to use the data is back in the hands of the principles of the data, and they have the power now to share the data based on their consent and monetize it as per their will. So the realization that the data it belongs to the individuals and the MSMEs, to take a second example, and that they have the power to do what they wish to do and when they wish to do. That is a big realization. And then all the financial institutions, anybody who holds their data, are only custodians of data. So we'll just go through these concepts quickly. I guess the format of the workshop is to have questions as interactively as possible, I would guess, but I will quickly run through the concepts for a few minutes, and we'll take a pause then to take questions. So this is, we are one of the first in India to have this license. These are the account aggregation. Basically, the concept is that all this has been regulated by RBI, and although the concept is applicable and will be applied to all data in the world, but right now we are starting with financial data, and RBI being the big brother regulator in the financial world, they have issued this regulation on behalf of themselves and three others, SEBI, IRDA, and PFRDA. So all the institutions that you see on the screen here, which come under these four regulators, come under the purview of this regulation, which is now already in force in India, right? So all financial data of consumers will be now exchanged under the purview of account aggregation regulation, right? There are many providers of products and services, and they need data. This is the genesis of the regulation. So let's see. These are numbers. Of course, there are a huge number of accounts, and a lot of users. There are many mutual funds. Just a couple of examples here. So we can skip this. This is not about statistics. One of the main things in account aggregation is, see, the idea of sharing data. It begins in the mind of the consumer. When the consumer thinks, I have some need for a product or a service, that's when the journey begins. So in the traditional world, when we needed a product or a service, we went to the bank or some institution, either physically or sometimes on the phone, or of course web for the last 15, 20 years. And then we would, in the olden days, we gave printouts of one bank to the other when you wanted data, and you will go and sit in a branch office to do that. And excuse me. And in the newer world, you have been uploading PDFs and Excel files and uploading into the service product provider. And that both are cumbersome, both for the user, which is consumer, which is, they have the, work to do, either to visit a branch or go to one website, download the data and, upload on another. And that is effort. And for the receiver of the data who is trying to provide a service, the data has to be converted into digital information, which is fed into their decision engine. It is more expensive when it is a printout, less expensive, but still expensive when it is a PDF and an Excel. and the costs are somewhere around 150 to 500 rupees, depending on what it is. And that cumbersome process is now replaced by account aggregation. So our goal is to not just remove the digital divide. That is one that has been done by all service providers like telecom and internet service providers, making those products cheaper. Now we want to remove the data divide in the country. So where every person, where the last person in our country in terms of economic status should have the power to say, this is my data, I'm giving this for my 10,000 rupee loan. That's the goal of account aggregation from our company standpoint. And we do believe that democratization of data is really the agenda here. So, of course, I mean, technically, we do all API-based access to all banks. By the way, we have also got access to GSTN, so that's good news for MSMEs. And of course, NBFCs, insurance providers are all there. And we provide, based on the consent, explicit consent as per RBI regulation, we provide machine-readable real-time data to decision-making engines of the products and service providers. So we can skip this. It is really quick. It is very simple. We become a data gateway of sorts. And we do this, by the way, what I'm showing you is in English, but we are doing this in all vernacular languages so that it really truly becomes a digital financial inclusion program. It is not just financial inclusion, so that people who are customers or users of financial services are able to help themselves easily and seamlessly. This is slightly looks busy, I mean, but it's a simple thing. Basically, just wanted to explain the concept here. Account aggregator is between the financial information providers, which is basically your bank, my bank, our accounts, our investments, our insurance policies, our GST returns, everything on the left side. On the right side, all the product providers like loan providers, wealth managers, advisories, and so forth. And we are in the middle, taking consent from the consumers and using certain format and the process. We provide the information to the financial information users. By the way, FIP, as it is called, and an FIU are both fungible. So the same institution can be an FIP in one transaction, will become an FIU in another. So that's a fairly simple thing. And I know I'm a little bit rushing here. I just want to make this more interactive. I think that's a better format in a workshop, but let's see how that works. So these are just examples. Please ignore the brand names. I did not have enough time. I apologize for that to prepare a specific one for this. Therefore, we do have some of our partners and potential partners' names over here. So basically, this is to say that this is not just for the what is popularly known as India One customers, which is the top 50 million customers in India. We will serve them definitely, but we also want to serve the MSMEs, the small business people, and definitely the underbanked people who are customers of microfinance or not even customers of microfinance sometimes. So one of the great things of this new emerging thing, by the way, I just want to mention that this is a concept that is just emerging worldwide. India is not behind anybody. In fact, if anything, I may say that this is a very unique regulation that RBI has passed, and we have feedback from advanced countries like the UK and EU that they actually feel that our regulation here is superior to some of the PSD2 and GDPR provisions they have. So that way we should feel good about it. This is going to protect all of us and enable many of us, if not all of us, in the coming years to do what we need to do to become more empowered in using the data for our financial planning and for our financial advancement, and not just the first 50 million, for most of the country participants in financial services. So that is a thing. And of course, we will leave this. These are just to give you a quick idea. These are all the way we have constructed it. It is a simple one-click ability. It is not complicated at all. You just get a little request kind of thing in simple plain language. Bank XYZ wants your data for a housing loan that you applied for, and they want this data of your salary account for 3 months, just to give you an example, or 6 months. And you have to say yes, no, that's it. So there's not too much complication over here, and all data is encrypted, it is secure, and the usage of the data is very much regulated and limited to the purpose for which you gave. So those are the simple concepts I'd like to stress. Obviously, there's a lot of detail to it, and there's a lot of, there's a detailed product journey. There's a lot of effort in building all of these things, making sure that it works per plan. And there are many regulatory requirements for the players, FIPs, FIUs, to use the jargon, and of course the AAs, to make sure that it is going as per regulation. So I think I would like to take a pause over here and request the host to please ask for questions, or if there is some other concept they would like me to cover, the participants, I will do so. Thank you so much.
Thank you, sir. Thank you so much. We do have questions for you. First question that we have is, how can account aggregation solve the problem of capital access to low-end merchants and MSMEs for lending who don't have credit history?
Excellent. Very good question. I'm so happy that has came, because that is a real focus area. Now, there are two parts to it. One is we have to keep in mind that account aggregator is an enabler. We don't give loans, obviously. I just want to make sure, in case someone had that notion. And we also don't tie up with, we don't do a platform like, bazaar this or bazaar that. We don't do that. How this can happen to MSMEs and underbanked people who are really at the fag end of the economic chain, is that they go to platforms that provide these, and there are many that are coming up. I'm sure you're aware of it. The platforms that provide these loans. What we are doing as account aggregators is, when you get to the platform, for them to take the data from you and analyze and give you a product, it becomes completely seamless and very easy. So there is no complication in it. It is simply a few clicks. We get the data from your provider of your information, and give it to them. Now, there's one issue here. If supposing the borrower is a completely first-time borrower, and the borrower does not have a bank account at all, there is a challenge. Because if the lender wants a history of bank account information, we need to provide that. However, if the potential borrower has a microfinance borrowing, even that is included in this scheme of things. So that these are the two things. But if you have absolutely no digital footprint, never borrowed from anybody, and you're running a little shop in a village, that's a challenge. Account aggregation cannot immediately solve. But we will come up with some solutions, but not right now.
The next question, yes, sir. Next question that we have is, does an account aggregator license gets me the telecom data also as an SMS of credit and debit transactions?
Excellent question again. Now, I do want to mention here, this regulation is issued by RBI on behalf of the 4 financial regulators. And obviously, telecom is regulated by TRAI. Now, TRAI, it doesn't come under the purview of this regulation. Having said that, I'm very happy to report, as part of my effort in evangelizing this ecosystem, I had met TRAI, and they issued a white paper which is submitted to the Government of India. And in the white paper, they said they want to restrict the usage of the data, telecom data of individuals, and allow that to be used based on consent, using the model of AA license issued by RBI. They actually put that in a white paper. It is a public document that has been submitted to the Government of India. Personally, I do not have knowledge whether the Government of India, the Telecom Ministry, has approved it, but I think that's in the works. If that is approved, the answer to your question is yes, but till that is approved, we have to wait.
Then we have how consent is managed. Is the customer being told explicitly about the potential uses of data? This is from Siddharth Jaiswal.
Excellent. So you have asked the question about the heart of the matter of account aggregation. What we do is the consent artifact, as it is called in jargon here, is built as per the standards and schema published by RBI. There is no discretionary power in the hands of AA or anybody else. So what that consists, I'll give you a use case example. Let's say you have approached a bank for a personal loan and they want 6 months data of your salary account. So the consent artifact will look like this. XYZ's salary account information from January to June shall be given to institution, bank PQR, for 3 working days for the purpose of evaluating a personal loan for this customer. That's it. That's how the consent is structured. And that consent is shared both with the provider of the information, FIP, as well as FIU. And in this case, the FIU is more critical for us. So the FIU gets it, and the FIU has to follow that consent. Within 3 working days, they have to evaluate the information and give a decision to the potential borrower. Now, after the decision is taken, whether it is denial of the loan or approval, whatever it may be, they cannot use the data for any other purpose. So just to give you an outlier example, for example, let's say the potential borrower applied for a 2 lakh loan, personal loan. They says, no, sorry, we can't give you the 2 lakh loan, but we can offer you a scooter loan of 1 lakh. No, that would be violation of the regulation and they cannot do it. They can only take 3 days to evaluate your personal loan request, say yes or no. After that, the data will be archived. After that, if the borrower wants to borrow a smaller amount or a scooter loan or some other consumer durable, it is for the borrower to initiate that transaction. So it is very specific and a one-time consent. Having said that, for certain use cases like a personal financial management application or for a loan monitoring case, if the principal of the data, the consumer, decides that I'm willing to give you access to my information for the next 1 year, that is the duration of a loan I have already taken, you have the ability to give, and there is a consent artifact that we construct for periodic fetch. So every month on so and so date, we'll pick up your balance and give it to the financial information user. But that's a choice you have. But even after giving that consent, as an example, you can actually revoke the consent. The revocation of a consent is always in the hands of the consumer, and that can be done within the app, in the comfort of their home, office, or whatever, in their private time. So there is no pressure from anybody. As I said, the heart of the matter is the power is in the hands of the consumer. That's the thing.
Sir, he also wants to know if there's any audit system in place to check the usage of data.
Excellent. Actually, the short answer is no. There is no audit system. It's an honor system. But I will tell you why I personally believe it will be very effective. It is like all these FIPs and FIUs which participate in the AA ecosystem are licensed by the regulators. And the regulators, at any point, if there is a discovery of violation of their practices prescribed under the regulation, they will be disqualified from participation in AA. That is one. That is a minimum punishment. Second punishment could be their regulator can haul them up and maybe some penalty. That is between that regulator and that participant. I do not have much to say, but I'm also not saying that a single violation will qualify a bank for the disqualification for participation in this, but it can be serious consequences. So there is no audit But if there is a discovery of violation, there will be punishment. How will the discovery happen? The consumer comes to know that his or her data has been misused, that is used for a purpose not specified in the consent artifact. Then they can file a complaint with an ombudsman, a data ombudsman, or a regulator, or they can file a complaint with our ecosystem. We have number of, we have in AS, we have contact points and other players as well. So there is a robust mechanism where you can file a complaint, but audit is not really practical. I also want to mention, we are talking about millions of transactions here, so it is practically not possible to audit, but complaints are actively taken up.
So we have another question for you. What kind of commercial model works between financial institutions and account aggregators?
Excellent. Now, the pricing is not regulated by RBI or anybody. Pricing has been left to market discovery. Now, for the moment, and by the way, I should mention to you, we are not yet production live. We expect to go production live sometime in the next month, August, with about half a dozen banks, 6 to 7 banks. The testing is complete. The approval process is ongoing now with the information departments and security departments of respective banks. So we'll go production live in August. Now, because it is market discovery, I'm sure most of our participants here are aware. A market discovery means market has to show competition, genuine competition. So there is no discussion in the ecosystem between different players. It cannot happen that way. That would be violation of the other regulation. We have a competition commission of India which governs these kind of things. So we cannot talk to each other. I'm mentioning that specifically because I do want to mention, I will share some ideas on pricing, but those are our company's ideas. This is not an idea from RBI or from all the association of account aggregators, FIPs, FIUs. No, this is from our company, decided by our company, right? So we are looking at API-based pricing, which means for each fetch of data and delivery of a file, we charge something to the financial information user. We don't expect any money to be taken from or given to an FIP because we have discussed it with FIPs, those that have come in, and they have been with a large heart have said that they will not charge for giving data. So that is one thing that is settled. That is a verbal and a gentlemanly agreement, but that is how it is. And FIUs will be willing to pay for two reasons. One is they are the beneficiaries in this transaction. They get information, they're doing business, so they have to pay for it. That's number one. Number two, today they are already paying for it, right? When they process a printout, it costs them 400-500 rupees. When they process an Excel or PDF document, it could cost anywhere between 100 to 200 rupees. So they are able to replace that with our charges, which will be a fraction of that. I'm not able to, probably not appropriate for me to discuss actual numbers, but it is fairly modest and it is below whatever is happening in the market. This will be the cheapest processing method. So I'm expecting that the digital lending, borrowing, digital financial activity will really become cheap and it will get enhanced. Unfortunate, but given that we have COVID, this will really take off in a big way. So that's the way we look at this system. So it will be very clean. And by the way, it is completely free to the consumers. As far as my company is concerned, we will not charge for the app. We will not charge for any service. The consumers and MSMEs get from us, it is free.
So next question we have from Mr. Nagendra Prasad. With account aggregation enabled, will I be able to access my other bank accounts?
Yes, absolutely. By the way, account aggregators under the regulation can take the data from an FIP, deliver it to an FIU, and also to the consumer herself. That is very important. After all, the data belongs to consumer. So there are certain use cases. Let's say the consumer takes the data and analyzes for herself in her device, like a laptop or a mobile phone. So that is possible. So we do, so let's say you use our app, you have accounts in 3 or 4 banks, let's say investments in a couple of mutual funds, you can get all the data and consolidate it in your device, either laptop or a mobile phone or whatever device you may be using. Answer is yes, it is possible. We will do that on day one.
So last question that we have is, how do you see the open banking trend in India changing with the implementations of account aggregation?
See, I do want to mention that open banking is a general concept. It is a worldwide term that is being used. So account aggregation and open banking are not two different things. As far as India is concerned, in a loose sense, you can say they're synonymous, but not necessarily identical. So, at the heart of open banking is that consumers should be able to move from bank to bank, from institution to institution, and do what they want to do in terms of financial services. So one of the aspects of open banking is moving data, but also there's the other aspect of transacting digitally. That is already very successful in India, UPI being as an example. In that Beam app or UPI based, all the apps, they have already democratized payments. So in a way, that is already open banking. So as far as I'm concerned, account aggregation, which is sharing of data based on consent, is really the heart of the matter of open banking. I mean, payments one way or the other, even before the concept of open banking has been emphasized, you are still able to do it with credit and debit cards. But today it has become more democratized with usage of apps based in the mobile. So, but that's a basic thing. One is payments, the other is information. I'm here to talk about information, and this is the next, change that will happen in financial services industry in India. They're not two different things. Open banking and this are about the same.
So we have an other question for you. The data here is very critical. How does the architecture help with the data protection against all leakage?
Against leakage, you said, right?
Yes, yes.
Okay, okay, okay. See, this is a very good question. First of all, so the journey begins like this. A consumer goes to let's say an app as an example for borrowing a personal loan, right? Take a personal loan of ₹1,00,000. So the journey begins in the app of a bank. XYZ bank has a personal loan app. In that personal loan app, the lender, potential lender says, okay, I need 1, 2, 3, 4 information. Are you willing to give for me to evaluate your eligibility for the loan? You will say yes. Then there will be a screen visible in which we call it the education screen, where the potential lender says, we have a partner one money, which is the, as a one money, it should be really any AA. We have a partner, or we have number of AAs as partners. It could be anybody, right? It need not be one. So we have this partner who will help you get the data from your bank to us digitally, securely, and it is regulated by RBI. This entity is licensed by RBI. Would you like to use their services? Most likely you will say yes, because they will also say it can be done in a couple of clicks on your cell phone, or you don't have to visit any office and all of those conveniences. Once you say yes, then there is a little then we bring up the consent request of this first the potential lender. The user, then that conversation is between account aggregator and the consumer. Listen, this lender has said that he needs 1, 2, 3, 4 information. For this purpose, are you willing to give? If you say yes, then we take that as a consent artifact, give it to FIPs. Now, here is a critical answer to you. When FIPs give the information that I asked for as per the consent, they give it in an encrypted format. Account aggregator cannot decrypt it, because the key for decryption is with the FIU, because it is an FIU key that can decrypt this. So we take that encrypted file from an FIP, give it to an FIU, only encrypted file. Once we have delivery confirmation at the FIU, even the encrypted file we delete. So there's absolutely no scope for leakage of information, at least as far as AA is concerned. And we only store your consent artifact as a record for customer service at any point in future, saying that you have given your consent so and so time, and we display that in your app for your own history. If you want to, let's say over a period of 4-5 years, you have given 10-15 consents, you want to know who all you gave your consents to, that is all visible. It is more customer service, but otherwise we don't have the data at all. And there is, in my opinion, of course, I mean, there is nothing called zero scope, but in my opinion, account aggregation does not involve any leakage of data, any potential for it. Because even if someone were to hack, just as an outlier case, hack account aggregator, between the time I get the encrypted file and give it to the FIU, any hacker will only get encrypted file, and that encrypted file cannot be decrypted by them unless they have the key from the FIU, which is impossible thing. So basically, that's how it is. In any case, the transition time between getting a file from FIP and giving it to FIU is barely a few minutes. So it's a very remote chance.
So last question that we have is from Manmeet Kalra. Can we use account aggregators APIs instead of asking customer to download the account aggregator app?
Yes. Answer is yes. We do have web responsive SDKs. So the consumer is not compelled to download our app. In a journey that can be finished with inside using the app of the product provider is possible, but the consent building, the account linking has to happen in our app, and that can be a web responsive app, not necessarily that they have to download the app. Having said that, I will say in the long run, it is good for the consumer to download the app because they get more power. They're able to see the summary of their activities. And especially in the case where they give a consent, let's say for a year, for a loan monitoring or for some other use case, let's say for a PFM, and somewhere after 3-4 months, the consumer thinks, no, this is not what I want to do. I've changed my mind. Then unless they have the app, it is difficult for them to revoke that consent. They can actually log in through a web also in a web application and revoke. But answer is yes, you can live your life without downloading our app, but it's just more convenient.
Thank you, sir. Thank you so much for this amazing and interactive session. I would also like to thank our attendees, sponsors, exhibitors, speakers, advisory board, brand ambassadors, ecosystem partners, FCC and PCI members, and supporters in making Global FinTech Fest one of the biggest virtual events. We are signing off now, but we still do have other sessions lined up today, so stay tuned. Thank you, sir. Thank you once again.
Thank you very much, Global Fest, and thank you the entire team and all the participants for the lovely questions. Have a good evening.
Thank you, sir.